In this video, we continue with our discussion on the basics of financial statements, and this video would be dedicated towards the profit and loss account. So what is also known as the income statement. This is a sort of a report card that gives us an idea about what the company has sold, what are the costs undertaken in selling that, and essentially the difference of between those two being the profitability of the firm. So that's what a profit and loss account or profit and loss statement stands for. Let's look at it in detail. Now, profits are a measure of a company's well-being and perceived value addition by the customer. The P&L account is a report card of the financial performance of the firm for a particular period. So remember, we had discussed that P&L accounts and cash flows are periodic statements. So P&L is a periodic statement. It gives you the performance of the company for a particular period, right? This period could be a year, this could be 6 months, this could be 3 months, it could be any tenure that you have chosen. So this is also known as P&L statement or income statement. The words earnings and profits are also used interchangeably, right? So that's broadly a straightforward basic definition of what a P&L statement or a profit and loss account looks like. Now let's understand that there are various definitions of profits that come out. First, let's kind of revisit our initial discussions. That balance sheet is as on a point of time, so that's a snapshot. And you have another snapshot, let's say after a year, of what the business health is. The business activity that the company has taken during the year, what it has produced, what it has sold, etc. All this is what is recorded in the profit and loss account of the particular company. It's one of the linking points of the two balance sheets, at the ending of the last year and the ending of this year, or beginning of this year and ending of this year. Now let's look at various views of profits that are available. Net sales are the revenues that you have earned. So essentially, sales are also known as revenues. This is what you earn by selling. This is the market price that you have earned, right? So this is the total selling price. This does not include the cost. Now, from this total selling price, if you remove the cost of goods sold, this is also known as COGS. Cost of goods sold is only the cost used in producing the goods. So only costs incurred in producing the good slash service, right? So producing is what is cost of goods sold. So this might include raw material cost, this might include some component of salary cost, this might include some component of electricity, etc. And all that combined will essentially give you the total cost of goods sold. Once you subtract this, you get what is known as the gross profit. That's the gross profit of the organization. That if I'm selling a digital marker and the cost that has gone in terms of producing that digital marker is known as the gross profit. If I find the sales and costs and the difference of those two, that is what is told as the gross profit. Now, from the gross profit, if I subtract the other expenses, what could be other expenses? Other expenses could be administrative in nature. Salary of, for example, salaries of people who are not directly involved in producing the good. Let's say someone in the HR department of the company. Those salaries. Other costs related to probably marketing, R&D, advertisements, which are not directly linked to the product, are all the other operational expenses. You subtract that, you get what is called as earnings before interest, taxes, depreciation, and amortization. This is known as EBITDA, or also commonly referred to as the operating profit of the business. Operationally, you have made certain costs. The COGS plus expenses give you the total costs that operationally have been taken. EBITDA is the earnings before interest, taxes, depreciation, and amortization. What is amortization? Amortization is depreciation for intangible assets. So remember, we had spoken about what depreciation is.